Hello again, traders. Chf Jpy here from DRFX, Forex Swing Trading, also known as Daddy Papi within the AUDUSD Forex community and the trading competition for this month of December 2017. Now I'm going to be taking a look at a recent trade that was made on the Swiss franc Japanese yen, which provided me with a short and aggressive trading gain of 37 pips, as I took advantage of the movement within the consolidation setup of the 4-hour chart of this currency pair. Now, consolidation trading is one of the most popular trading strategies that retail traders use, but it's also one of the most challenging setups that we can trade because of the tendency of the market to provide a significant level of volatility as it moves from resistance to support and eventually breaking out. Now, one of the ways in which we can avoid these volatile conditions and trading losses is to ensure that when we're trading consolidations, we ensure that the consolidation setup is of the type that provides stable waves within the boundary so that we can take advantage of them with strong and reliable trading signals. One of the many frustrating things that we can come across when trading these setups is that if we enter the support boundary, for example, and are aiming for the resistance target, what can happen sometimes is that the market will move midway the boundary and provide us with a floating profit, and then suddenly you turn and reverse and head back to the support boundary, and in so doing taking out our stop loss. Now, one of the ways in which we can avoid this is to avoid consolidation setups that are volatile and that are prone to these types of reversals that lead to losses. So the first step in trading consolidation is to ensure that we identify the consolidation setup and ensure that it is of the type that is stable and provides smooth waves that can provide us with reliable signals to take advantage of these movements within the boundary. Now here you can see the consolidation range setup on the 4-hour chart of this currency pair, where the market provided several bullish and bearish waves over the last several weeks, which led to the formation of the consolidation setup defined by this resistance boundary here and this corresponding support boundary. So what took place with this recent trade was that as the market started to U-turn and rally at the support boundary, I identified the formation of a strong bull candle, this one here, just at the midway point between resistance and support, and opened a long position at the close of this candle here, and place a stop loss just below the wick of the candle, and then set a trading target to the resistance boundary of this setup. And as you can see here, after about 1, 2, 3, 4, 5, 6 candles, equating to a 24-hour period, the market eventually hit the target and provided a trading gain of 37 pips. So this was a very good example of how we can take advantage of movements within consolidation until the breakout eventually takes place. A similar trade took place earlier in the month, this time taking place on the Euro Kiwi dollar, also on its 4-hour chart. In this case, however, I took advantage of the false breakout reversal that took us back inside of the consolidation following the failed bullish breakout, and was heading back to support, and just below the midway point of this movement, I entered the market and traded it towards support boundary, where I captured a trading gain of 74 pips. So this was another example of how we can take advantage of movements within consolidation with strong signals and stable candlestick movements. And another example here on the pound Aussie dollar 4-hour chart, where another downtrend took place as the market was forming a consolidation setup on this time frame, providing a trading gain of 109 pips as I entered just at the midway point here, as the market formed a bearish candlestick formation, to indicate the continuation of this bearish movement that was expected to be part of the formation of a consolidation setup. So this recent trade on the Swiss franc Japanese yen and on those two other currency pairs that I just showed you were very good examples of how we can take advantage of consolidation setups, trading between the movements, trading within the boundaries of resistance and support until the breakout eventually takes place. Once we identify the consolidation setup and ensure that it is providing stable movements and reliable entry signals, we can then take advantage of them by opening up our positions in the direction of the movement, placing our stop loss at a very reliable and safe area, and then taking advantage of the movement as the market heads towards the other side of the boundary, providing us with our trading gain. So we're going to be looking out for another trading opportunity either on this currency pair if the market reverses and heads back inside with the consolidation, similar to what it did at this area here, or we can simply take a look at another currency pair and take advantage of movement within consolidation on that currency pair and capture our trading gain in sync with our trading strategy. So until next time, traders, happy trading.